All right, so after months of some pretty sharp corrections, the meme coin market is finally showing its first real signs of life. And for a lot of traders, this quiet moment, well, it feels really familiar. It's that kind of feeling you get right before a huge shift. So let's put on our detective hats. We're going to dive into the data and see what clues we can actually uncover.
Which, of course, leads us to the one question that's on every single trader's mind. Is this it? Have we finally hit the bottom? To get to the bottom of that, we're going to act like investigators, piecing together all the clues from on-chain data, from historical patterns, and from the new tools of the trade.
Okay, first up, let's look at the hard evidence. We're starting with the on-chain signals. This is the raw data that gives us a direct, unfiltered look at what's really happening inside the market.
And wow, the first clue is a big one. The global meme coin market cap just recently surged to right around $48.3 billion. Now, this isn't just some small fluctuation. We're talking about a massive injection of capital. It tells us that after a long quiet period, big money and a whole lot of attention are starting to flow back into this space.
Now, what's really interesting is just how fast that happened. The market cap saw a 9.4% rebound in just a matter of days. A jump like that? It signals a pretty decisive shift in how the market is feeling. We're moving away from fear and uncertainty and back towards a bit of renewed optimism.
So here's the crucial part. This rebound didn't just happen out of nowhere. It came after almost 2 whole months where the market basically just went sideways. And that pattern? That's a classic sign of what's called seller exhaustion, where all the downward pressure just kind of runs out of steam, and the power starts to shift back over to the buyers.
And that brings us to a really key technical clue, bullish divergence. So in simple terms, while the price chart was hitting a new low, the momentum indicator, in this case the RSI, was actually making a higher low. You can think of it like a car's engine revving up before the car itself actually starts to move. It's a classic textbook signal that a potential reversal is just around the corner.
So we've got our on-chain clues, but do they actually fit a pattern we've seen before? For our next piece of evidence, let's turn to history. Can it give us a kind of roadmap for what might be coming next?
And what we see here is this recurring rhythm in the market. I mean, look at it. In both 2021 and 2023, we saw this exact same setup. A long, quiet period of basically flat, boring price action, followed by a sudden, explosive rally that kicked off a brand new meme coin season. The market structure we're seeing today, well, it's starting to look eerily similar to those previous launch pads.
But here's where our investigation takes a really interesting turn. They say history rhymes, but it doesn't always repeat exactly. And this cycle is different. And that's because the players, the traders themselves, have changed. So let's look at the new rules of trading.
I mean, the contrast between then and now is just night and day. The old days were pure chaos, right? It was all about chasing rumors on social media, making emotional trades, and just trying to navigate with almost zero real data. Today, the game has completely evolved. Traders are using real-time analytics, they're tracking smart money wallets, and they're building actual informed strategies. It's way less gambling and a whole lot more data science.
And this whole evolution, it isn't just about traders getting smarter on their own. It's about the tools getting so much better. A whole new class of incredibly powerful analytical platforms has popped up, and honestly, they've become essential for anyone who's looking for a real edge in this market.
So what's actually in this modern toolkit? Well, you've got top-tier platforms that give traders a single view across more than 130 different blockchains. You can analyze liquidity in real time, you can follow the wallets of the most successful traders, and you can spot new tokens the second they're created. The whole point is to filter the actual quality signal from the incredible amount of noise out there.
Okay, so with this new toolkit in mind, how do we actually use it to spot the next big wave? Let's bring everything together in our final section and see what all this evidence tells us we should be watching for.
So if a new season is truly starting, it's probably going to unfold in this classic rhythm. First, you'll see liquidity start to concentrate into just a handful of early winners. Then the smart money rotates in. That triggers a whole wave of new token launches. And then finally, retail traders jump in after those early gains get just too big to ignore. Understanding this sequence, that's the key.
So, when you're using these new tools, what are the vital signs? What are the green flags of a healthy rally? Well, first, you need to see organic liquidity growth, not just a few big buys. The volume has to be consistent and growing. The holder distribution should be spread out, and most importantly, you want to see clusters of smart money wallets all moving in. These are the signals that will confirm if the bottom is really truly in.
So are we at the bottom? Well, the on-chain data is definitely pointing toward a potential turn, the historical patterns are rhyming, and we know traders are better equipped than they've ever been. While, nothing is ever guaranteed, the groundwork really seems to be in place. And it's worth remembering what the source material for this explainer said: when meme coin season begins, it rarely whispers, it roars. The data suggests the quiet might be ending. The only question left is, are you ready for the roar?